usually the premium money should be allocated from the securities premium account, and if it is not sufficient only, then we can consider to draw from this profit and loss account. We have the proceeds of equity shares 50,000, so the balance I have to draw from profit and loss account 1,50,000. We have this preference share capital. I am making use of the revenue reserve, that is a divisible profit, so I have to transfer that revenue reserve to capital redemption reserve account. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to this session. In this session 3, we will be working some more problems on redemption of preference shares. Now let us see what is this problem about. The following is the balance sheet of Suhas Mobiles Limited as on 31st March 2021. The date of redemption of preference shares. So on 31st March 2021, the redemption of preference shares was carried out. Now in the liability side, we have the share capital, that is the equity share capital of rupees 10 each, shares of rupees 10 each, that is 4 lakhs. Preference share capital, see this is partly paid up. Partly paid up is 1 lakh, fully paid up is 2 lakhs. Now we should understand that we will be carrying out the redemption only if the shares are fully paid. So we will take into consideration only the shares which are fully paid. That is 2 lakhs worth of preference shares. Next, capital redemption reserve 1 lakh, securities premium account 5,000, profit and loss account 2 lakhs 95,000, current liabilities 4 lakhs, total is 15 lakhs. Now, in the fixed assets, we have 10 lakhs 50,000 worth of assets, non-current investments. So, the book value is 2 lakhs and the face value is 2 lakhs 37,500. Cash and cash equivalent is 1 lakh. Other assets 1 lakh 50. So, the total comes up to 15 lakhs. So, this is the position of the balance sheet that is before redemption. Now, to redeem preference shares, following resolution is passed. The preference shares are to be redeemed at a premium of 20%. So, fully paid preference shares, what is the capital? We have to check here. So, fully paid preference shares are worth 2 lakhs. So, 2 lakhs. So, plus 2 lakhs. That is 2 lakhs plus 20% premium we have to pay. Then investments are sold at a loss of 5%. Now, what is the value of investment we are having here? The value of investment is 2 lakhs. So, this we have to calculate. So, into 2 lakhs, that is always on the book value we calculate the loss. So, 2 lakh into 5% we have to do. Then 5,000 equity shares of rupees 10 each are to be issued at par for the purpose of redemption of preference shares. Pass journal entries to record the above transactions assuming all necessary formalities are fulfilled. Prepare the balance sheet after redemption of preference shares. So, this is the problem. Now, we have to first write down whatever is given in the problem here. So, just let us see what is the balance sheet about. So, in this balance sheet, we don't take this into consideration. This 1 lakh we are not redeeming. Why we are not redeeming? Because it is partly paid. So, in order to see that we have this, if we need to have redemption for these shares, then first we have to convert them into fully paid and then we have to go in for redemption. In this problem, they have not mentioned anything about it. So, we will go ahead with the redemption of only fully paid shares only. So, that is 2 lakhs. Then we have the capital redemption reserve at 1 lakh. Then securities premium account. So, whenever we are paying premium, usually the premium money should be allocated from the securities premium account, and if it is not sufficient only, then we can consider to draw from this profit and loss account. So this we should keep in mind. Then we have the investments which are being sold. Then we have the cash balance. Okay, so let us, we have just analyzed. Now let us see what we have to, what is the amount needed for redemption. Amount needed, that is rupees 2 lakhs, and there is a premium of 20%. So 20% premium. 20% of 2 lakhs is 40,000. So 40,000. So total money needed is 2,40,000. So this is the total money required. But then what are the arrangements they have made? Let us see here. So in order to raise the funds for 2,40,000, the company is selling the investments. So we have sale of investments. Sale of investments. So the investments are sold at a loss of 5%. So this will be equal to 2 lakhs, that is the book value, into 5%. So that comes up to 10,000. So this 10,000 is a loss to the company which should be debited to profit and loss account. Then next, what they are doing, they are issuing 5,000 equity shares of rupees 10 each. So issue of equity shares. Issue of equity shares, that is 5,000 into 10, that is equal to 50,000. So it is issued at par, so there will be no securities premium account. So issued at par for the purpose of redemption. Pass journal entries to record the above transactions, assuming all necessary formalities are fulfilled. Prepare the balance sheet after redemption. So they are selling the investments, that is sale of investments. This is the loss here. So the loss is 10,000. So the investments will be 2 lakhs minus 10,000, that is equal to 1,90,000. So they are getting 1,90,000 by the sale of investments, and through the issue of equity shares they are collecting 50,000. Then we also have to see what is the bank balance given. So bank balance they have at 1 lakh. So I think it will be sufficient to pay off the money. So the first thing is we have to pass the journal entry. So what will be the journal entry? First one will be for the sale of investments. Second one will be for the issue of equity shares. So I write first one, for the sale of investments, bank account debtor, bank account debtor 1,90,000. Then profit and loss account debtor, profit and loss account debtor 10,000 to investments account. To investments account 2 lakhs, being sale of investments at a loss, which is debited to P&L account. So the loss has been debited to P&L account. Now, next we have the issue of equity shares. So we pass an entry for issue of equity shares. So I write bank account debtor bank account debtor 50,000. Since the equity shares are issued at par, there is no premium here, to equity share capital account. To equity share capital account 50,000 being issue of equity shares at par for redemption. So, the equity shares are issued at par for redemption. Now, the next thing is we have to arrange for the premium money. So, what is the premium money here? So, premium money is 40,000 rupees. So, for this 40,000, we have to see what is there in the balance sheet. So, do we have securities premium account? Yes. So, this 5,000 we will make use of from the security premium account, and then the rest of the 35,000 I will have to draw from the profit and loss account. So, I write premium is 40,000, then balance in securities premium account. So, 5,000 balance is there. So, from this 40,000 I remove 5,000. I have 35,000 which has to be adjusted from P&L account, from profit and loss account. So, from the profit and loss account, I am adjusting this 35,000. We have to arrange for the payment of capital of 2 lakhs here. Now, for the payment of capital, they are issuing equity shares. So, I will write preference share capital payable, that is 2 lakhs less proceeds of equity shares. So, we are selling equity shares worth rupees 50,000. So, I am having 1,50,000. So, this one adjusted from, this has to be adjusted from the profit and loss account. So, this is to be adjusted from the profit and loss account. So, we have the amount needed 2 lakhs, premium 40,000, 2,40,000. Sale of investments is 1,90,000. So, we got a loss of 10,000 here. So, issue of equity shares is 50,000. So, premium I am paying from securities premium account, rest from profit and loss account. Preference share capital payable is 2 lakhs. For fresh issue, I am getting 50,000. So, the rest of the money I am taking from profit and loss account. Now, I have to make the journal entries for these transactions. Now, the third transaction is I have to make an entry for the premium. So, I have to debit securities premium account and profit and loss account. So, I will write securities premium account debtor rupees 5,000, then profit and loss account debtor rupees 35,000 to premium on redemption of preference shares. To premium on redemption of preference shares 40,000 being premium adjusted from securities premium account and profit and loss account. So we have adjusted the premium from securities premium account and profit and loss account. Now the next entry will be for the transfer to capital redemption reserve. So if you can see here in the previous calculations, so we have the proceeds of equity shares 50,000. So the balance I have to draw from profit and loss account 1,50,000. So that I will have to make an entry. So profit and loss account debtor, profit and loss account debtor 1,50,000 to capital redemption reserve account. To capital redemption reserve account 1,50,000 being divisible profits used for redemption transferred to CRR, that is capital redemption reserve account. Now the next journal entry will be for transferring the capital and premium to preference shareholders account. Write down preference share capital account debtor 2 lakhs, preference share capital account debtor 2 lakhs, premium on redemption account debtor, premium on redemption account debtor 40,000 to preference share holders account. To preference share holders account 2,40,000. 2,40,000 being share capital and premium due to preference share holders. So this is the money due to preference share holders. Now the last entry will be for payment to preference shareholders. I write preference share holders account debtor. So then we have to pay them 2,40,000. 2,40,000 to bank account 2,40,000 being payment made to preference share holders. So we have the 6 journal entries which we have to write. Now the next is the balance sheet. Now when we are writing the balance sheet, we will have to see the previous balance sheet and write it down. So what is the share capital here? Equity share capital of rupees 10 each, 4 lakhs they have written. So 4 lakhs means what is the number of shares here? So this will be equal to 4 lakhs divided by 10. So delete So how much it is? So the number of shares is 40,000. Now we have a fresh issue of 5,000 equity shares for redemption. So I am adding that 5,000 here. So totally I am having 45,000 equity shares. So I will write in the new balance sheet, when I am writing, I will write share capital 40,000 plus 5,000 equity shares of rupees 10 each. So 45,000 into 10 will be 4,50,000. Now the next one, if you can see here, we have this fully paid shares we have already redeemed, so we will not write. So preference share capital partly paid we will write. So next will be preference share capital. This is partly paid. This is 1 lakh. I write it as it is. Okay. So the next one will be, what is the next balance here? Capital redemption reserve account. So this capital redemption reserve, there is a change in the balance. Let us see how it will change. So I write capital redemption reserve account. So there is already a balance of 1 lakh here, plus, see if you can see here, we have taken from the profit and loss account 1,50,000. So I have transferred 1,50,000 to capital redemption. So that money I have to add here. So 1,50,000. So total will be 2,50,000 in capital redemption reserve account. Then the next one will be securities premium. 5,000 is there. 5,000 we have already made use of. So it is nil. Then profit and loss account. So this profit and loss account, we will have to calculate the balance. Profit and loss account. So we will see here in the next slide. So balance in profit and loss account. So what is the balance given in the balance sheet? 2 lakhs. The balance sheet balance is given as 2,95,000. 2,95,000. So out of this 2,90,000 less loss on sale of investment. Loss on sale of investment 10,000 I will reduce. So what is the balance? 2,85,000. Now from this 2,85,000 I will reduce the premium utilized, premium money. Premium money 35,000 we have taken from P&L account. So that I will reduce 35,000. So what will be the balance? 2,50,000. Now again from this 2,50,000 less transfer to capital redemption reserve. Transfer. So we have transferred 1,50,000 from this. So what is the balance in P&L account? 1 lakh. So balance in P&L account is 1 lakh. So this balance I will write here as 1 lakh. Then we have current liabilities. Current liabilities. Now what is the current liability? 4 lakhs. So I will write 4 lakhs. Next one, In the asset side, we have fixed assets, there is no change. And then we will not write investments because investments are already sold. Then cash balance we have to calculate. So I will write fixed assets 10,50,000. Then investments nil. Then cash and cash equivalents. Then we have other assets. Now we have to calculate the cash balance. So I will write here cash balance. So what is the opening balance? Opening balance of cash, just see the balance sheet. What is the opening balance of cash here? 1 lakh. So I will write 1 lakh. 1 lakh. Opening balance of cash is 1 lakh. Add sale of investments. So when we are selling the investments, I got 1,90,000. Then add issue of equity shares 50,000. So the total will be 1 lakh, 2 lakh, 3,40,000. 3,40,000 less amount paid to preference shareholders. We have paid 2,40,000. So the balance in the cash is 1 lakh. Cash balance is 1 lakh. So I write here cash balance 1 lakh. Then other assets balance 1,50,000. So other assets balance is 1,50,000. So the total will be 10, 11, 12, 13 lakhs. Here also it will be 4 plus 4, 8, 10, 11, 12, 13 lakhs. So this is how we have to work out the problem. So we have one more problem here. So let us see the problem here. The following is the balance sheet of Reliance Limited as on 31st March 2020, the date of redemption of preference shares. So the share capital is 4 lakhs. So they are redeemable 8% preference shares of rupees 100 each, fully paid. So they are fully paid. So this 4 lakh we have to take into consideration for redemption. Then next is 3,009% preference shares of rupees 100 each, rupees 80 paid up. Now this we will see 2,40,000. This is a partly paid share. Next, 1 lakh equity shares of rupees 10 each, 10 lakhs, revenue reserve 5 lakhs, security premium 50,000, current liabilities 2,70,000. Sundry assets 18 lakhs, cash and cash equivalent 6 lakh 60, total is 24 lakh 60,000. Now, it was decided to redeem both the classes of preference shares at a premium of 5%. Now, there are two types of preference shares here. So, one is the fully paid, another one is the partly paid. Now, they have told us specifically that we have to redeem both the shares. So, in order to redeem this, I have to make it fully paid and then redeem. So, I have to make a final call on these shareholders and collect the call money, and then I have to go in for redemption. Then, the company issued for cash as many equity shares of rupees 10 each as when necessary to provide for the redemption of both the classes of preference shares. So they have not given us the number of equity shares to be issued. So we have to calculate and then we have to just go in for redemption. The issue was fully subscribed and all monies were received. Pass journal entries and draw up the amended balance sheet. Now, First thing is we have to make the partly paid share into fully paid. So how many shares are there? 3000. So what is the payment made here? 80 rupees. So we have to collect 20 rupees from these 3000 shareholders. So first thing is I will write share final call. Share final call money. Share final call money will be 3000 into 20. So 3000 into 20 will be equal to 60,000. So this 60,000 money we have to collect from the preference shareholders. Then the next one will be we have to calculate both. So when I collect 60,000, this becomes fully paid and this total will change. So the preference share capital will be 3 lakhs here. 3 plus 4, 7 lakhs. So next will be preference shares, share capital to be redeemed. That will be 3 lakhs plus 4 lakhs. So how I got 3 lakhs? So this is the 3 lakhs I have partly paid into fully paid. So 3 lakhs plus 4 lakhs, that will be equal to 7 lakhs. So 7 lakhs money I need. Then add premium. Premium is how much? 5% premium. So 5% of 7 lakhs. So that will come up to 35,000. 35,000. So total is 7 lakhs 35,000. So this is the amount needed for redemption. Amount needed for redemption. This is the amount needed for redemption, 7 lakhs 35,000. Now, the next thing is we have to provide for the premium. So the premium money is 35,000. So we have to see whether there is a premium account here. So securities premium account, there is already 50,000. So from this we can take the 35,000 for the premium. Then the next thing is, so I will write premium payable. Premium payable is 35,000. So I will debit securities premium account balance 35,000. So from the securities premium account, I am taking this 35,000. So it is sufficient. So what will be the balance in securities premium account? 15,000. Now, the rest of the money I have to raise is 7 lakhs. Now, this 7 lakhs I have to raise through the issue of equity shares. Now, I have to calculate what is the number of equity shares I have to issue. So, already in the revenue reserve, I have 5 lakhs. So, out of this revenue reserve 5 lakhs, I can make use of it for redemption. Then rest of the 2 lakhs of money I have to make use of from the issue of equity shares. So we have the preference share capital totally 7 lakhs. Now out of the 7 lakhs less revenue reserve 5 lakhs. So what is the rest of the money? 2 lakhs. So this I have to use from profit and loss account. So this I have to make use of with the help of issue of equity shares. So I have the rest of the 2 lakhs. So this 2 lakhs issue of equity shares. Equity shares worth rupees 2 lakhs I have to issue and raise the funds for redemption. Now, I have to pass journal entries for this. Now, the first journal entry for share final call money due, then call money received. Then the next one will be for issue of equity shares. So 2 lakhs worth of equity shares are issued. So I have to make an entry for that. Then next will be the premium adjustment. Then next will be for the capital adjustment. So we will go ahead with the journal entries. So first one, share final call account debtor. Share final call account debtor. So what is the final call? 3,000 into 20, that is 60,000 to preference share capital account. To preference share capital account, 60,000 being call money due. Call money due. So 60,000 is due from the preference shareholders. Now, the second entry will be preference bank account debtor. You have received the call money. So, bank account debtor 60,000 to preference share final call account. Final call account 60,000 being final call money received. Final call money received. Now, after this, we have to pass a journal entry for issue of equity shares. So, I write next one, bank account debtor, 2 lakhs to equity share capital account 2 lakhs being issue of equity shares. Issue of equity shares. Now, the next entry will be for adjustment of premium. So, this premium amount is 35,000. So, which I will be adjusting from securities premium account. So, I write, so the fourth one will be securities premium account debtor 35,000 to premium on redemption. To premium on redemption of shares. 35,000 being premium money, premium adjusted from securities premium account. So, I have adjusted the 35,000 from securities premium account. Now, the next thing is we have this preference share capital. I am making use of the revenue reserve, that is a divisible profit. So, I have to transfer that revenue reserve to capital redemption reserve account. So, the next entry will be, that is entry 5, revenue reserve account debtor. Revenue reserve account debtor 5 lakhs to capital redemption reserve account. To capital redemption reserve account 5 lakhs being divisible profits used for redemption transferred to CRR account. So, I have transferred an equal amount to CRR account. Now, the next journal entry will be very easy. So, transfer of capital and transfer of premium to shareholders account. So we will just see what are the capital we have. 8% preference share capital 4 lakhs, 9% preference share capital 3 lakhs. Then I write 8% preference share capital account debtor 4 lakhs, 9% preference share capital account debtor 3 lakhs. Then premium on redemption account debtor, premium on redemption account debtor 35,000 to preference share holders account 7,35,000. So this is the money due to the preference shareholders. Now the last entry will be, so this is being money due to preference share holders. Okay. The next one will be preference share holders account debtor, preference shareholders account debtor 7,35,000 to bank account 7,35,000 being amount paid to preference shareholders. So this is the money paid to preference shareholders. So we have the balance sheet here. So first thing is, so we don't have the preference shares here because all this is also redeemed. These preference shares are also redeemed. Now we have 1 lakh equity shares of rupees 10 fully paid 10 lakhs. Now we have issued equity shares worth rupees 2 lakhs. So that is 20,000. So I will write share capital 1 lakh plus 20,000 equity shares of rupees 10 each. So that will be equal to 12 lakhs. 12 lakhs. Now the next one we have revenue reserve is not there. We will have capital redemption reserve. I will write capital redemption reserve account 5 lakhs. So the revenue reserve has been nil because it is transferred to capital redemption reserve. Then next we have securities premium account. Now there is 50,000 in this account. From this I am taking 35,000. The rest of the 15,000 I will write as it is. Now the next one will be current liabilities 2,70,000. So the current liabilities, there is no change here. So I write current liabilities 2,70,000. Now in the asset side sundry assets 18 lakhs. I write it as it is. Sundry assets 18 lakhs. Then cash and cash equivalents. So we have to calculate the cash now. So cash balance after redemption. So opening balance of cash. What is the opening balance of cash? Opening balance of cash is 6,60,000. I write it as it is. 6,60,000 opening balance of cash I have. Then add final call money. Final call money. What is the final call money? 60,000 I have received. Then I am also issuing issue of equity shares. So from issue of equity shares, I am getting 2 lakhs. So what is the total money I have here? So 6 plus 6, 12, 2 borrow 1, 8, 9,20,000 I have. So out of this 9,20,000 less amount paid to preference shareholders, 7,35,000. So 7,35,000 I have paid to the preference shareholders. So the rest of the amount will be the balance. So what will be the balance here? 5 here, 8. 1,85,000 is the balance. So I write the balance as 1,85,000. So now the total will be 19,85,000. Here also I have 12 plus 5, 17, 18, 19. 19,85,000. So this is the answer. With this, we come to the end of this session. Hope you have all followed it. Thank you.